So the estimates were between the government overstated 300,000 jobs or 1 million jobs. We have the number now from the government. It is essentially 818,000 jobs. It's the largest revision in total payroll since 2009. And that 2009 number, it's the Bureau of Labor Statistics from the end of the Bush administration into the Obama administration. And now it's all the Biden administration. And of course, the reaction on the right is that was a conspiracy to make Joe Biden look good. Listen, the partisan in me wants to say yes, absolutely. The reasonable, logical person in me says, if so, they would have waited until next year to revise it, not in August in the middle of the Democratic National Convention before an election. But they do this all the time. Essentially, every August, they do a comprehensive audit of their numbers of the past year, March to March. They revise them and they release them. And usually the number's not a big escalation. This time it really is. Now, why is it big? The reason it's big, we can attribute it to the deep state bias to the Democrats. How about that? That's the easy answer. Is the Bureau of Labor Statistics bureaucrats favor Joe Biden? They wanted to make him look good, and so they've been covering the economic data for him, making the economy look better than it is, and decided to announce that actually they've been rigging it during the Democratic National Convention in the run-up to the election. My brain, the logic of the timing doesn't make sense to me if it was some partisan hackery within the Bureau of Labor Statistics. Do I actually think that there's a bias in BLS and other departments towards the Democrats? Absolutely, yeah. I don't think you could deny it. A lot of these people were Democrats. They got into government because they wanted to do good. But there's a larger issue at play here than just a rank deep state conspiracy to help Joe Biden. Because if it was just a rank deep state conspiracy to help Joe Biden, they would have waited until after the election to tell everyone they've been lying. The problem is how they collect the data to begin with. They collect the data through surveys. And just as you don't find polling accurate, this is essentially a poll. And it's not great. It's based on lots of different data metrics. Statisticians deal with it. And, they say there are lies, damn lies, and statistics. They do statistical sampling, they do surveys, but then what they do once a year is they take the actual unemployment data from the states. Part of the real reason that there's a problem here is not the federal government, but California. The way California has reported and handled its unemployment data has had a lot to do with this. The California economy is actually underperforming the rest of the nation, though Gavin Newsom would have you believe otherwise. So it's more complex than just government conspiracy. I'm not going to tell you you're wrong if you believe it's government conspiracy, because part of me honestly believes that biases within the Bureau of Labor Statistics towards the Democrats have helped them do this. But that still does raise the question of why do this before the election instead of after the election. The larger issue, though, regardless of whether or not you blame it, of course, the Democrats spin as well. Joe Biden still, even with his revision, created more jobs than Donald Trump. That's not really true, because you had a whole lot of people go out of work during COVID, and part of the job creation numbers from Joe Biden are not people going into new jobs, they're people returning to their old jobs. And that the Democrats can't be intellectually honest when they talk about it is part of the problem here, and that breeds and festers the conspiracy theories on the right. What do the numbers actually look like, though? It's the largest revision since 2019. The numbers have been revised every month, by the way. But then there's this broader revision with the quarterly census of employment and wages, where they take all of the revisions that they make month to month, and they compare them to the actual tax records on unemployment in the states. Every employer pays an unemployment tax. And every year they do this audit where they revise the numbers based on that. So how does this actually translate? Well, professional and business services actually were overstated the most. Turns out there are 358,000 less people in professional and business services than originally claimed. In the leisure and hospitality sector, there are 150,000 less. Manufacturing, 115,000 less. Transportation and utilities, 104,000 less. Now, interestingly enough, within the trade category, retail trade numbers, people work in retail, actually were understated. There are 129,000 more people working retail than the government initially thought. Interestingly enough, government jobs were the least inaccurately stated. They revised up just 1,000. Turns out there are only 1,000 more people working in the government than they expected compared to retail, where there are 129,000 more people working. So how does this actually play out? One, broader distrust of government. Again, we haven't seen this level of screw up from the Bureau of Labor Statistics since 2009. Again, it's worth pointing out for those of you who say, well, that was the Obama administration. The Democrats are at it again. Yes, but those numbers went back to the Bush administration, those revisions. But where this is really going to come into play is next month, in just a few weeks, the Federal Reserve is going to analyze whether or not to lower interest rates or not. The unemployment rate in the country is rising. Now, this is one of those complexities that you have to understand. There are a couple of unemployment numbers. The one number we look at is the common unemployment number. That is, unemployment has gone up. But the reason unemployment's gone up is because people are looking for work. Now, for those of you who don't understand that, when you stop looking for work, you are no longer considered unemployed. You have no job, but this is the government we're talking about. If you're looking for a job and can't find a job, you're unemployed. If you stopped looking for a job, you're not considered unemployed. You're considered outside the workforce. You have to be inside the workforce looking for a job to be considered unemployed. One of the reasons the unemployment rate is going up is because people who were sitting on the outside are now having to go back into the workforce and find a job, and they're now considered unemployed again. That right there is a troubling sign for two reasons. One, what it's suggesting is a lot of people sat out, decided I'll live off my savings, and two, that savings is no more, and they're having to go back to work now. You want your red flag? Here's your red flag. It turns out that credit card defaults are at record levels. The delinquency rate on credit card loans is the highest it has been. We're hitting 8% in 2024. 8% credit card defaults. It's now rising faster than in the 2008 financial crisis. Should be a red flag for all of us. Not only that, repossessions on vehicles are increasing. So repossessions on vehicles are increasing. Credit card defaults are increasing. Mortgage foreclosures are increasing. The credit cards increasing. Car repossessions increasing. We've overstated the economy by about 1 million jobs. Things are not nearly as good as they had us believe. Now, the side note here is how many of you have been lectured by the media that things are better than you know? For the last 3 years now, you haven't felt like the economy was good. You knew people who couldn't find work. You knew people who were laid off. You knew people who were struggling. You yourself were struggling. And the government and the media told you, actually, the data says it's all in your head. Turns out you were right. The government was wrong. Turns out you were right and the media was wrong. The media that now wants to lecture you on Kamala Harris and Tim Walz and their record, and the media that wants to lecture you on Donald Trump and his record, the media that wants to lecture you on just how good the economy actually is, turns out the media was wrong. And the media was wrong in large part because the government itself screwed it all up. Never blame maliciousness when incompetence typically has everything to do with it. But this is where perception comes in. Because you know where the most of the job impacts were? Most of the job impacts were actually in red states. You in the red states, you were the ones who had the problem. You in the red states are the ones who have felt inflation more than the coastal elite. You in the red states are the ones who have felt the strain of jobs. You in the red states and the swing states of America in the heartland, you're the ones who have struggled. It hasn't been the coastal elite. It hasn't been the people in the Ivy League. It hasn't been the Democrats. It hasn't been the progressives. It's been the swing state, white collar and blue collar workers of America who have been struggling, and they've been struggling in swing states. They've been struggling around the country, and yet the media lives on the coast. The media has it pretty good, and so the media hasn't believed you. They believe the government, and now suddenly the government's coming out saying, actually, we've been wrong the whole time. This is Rick Santelli breaking the news to CNBC viewers earlier today as the numbers came out.
You know, the range of how many jobs they would take away for a variety of reasons, maybe the largest is the birth-death model for businesses, was going to be somewhere between 350,000 and 1 million. It comes in at 818,000. Now,
818,000. Now, what's the market been doing as a result of this? The markets are actually pretty flat right now. They're trying to digest it. They're thinking maybe the Fed will cut interest rates now. But the larger, bigger issue here is that the media relied on the government, and yet again, because they relied on the government, they got so much wrong. They relied on the government for everything about COVID, and they got so much of that wrong. The media lectures you that you don't know how well you have it, and the media thinks that they can tell you your own lived experience. You know, for years and years and years, the left lectured us about lived experience. And you shouldn't question people and their quote-unquote lived experience. Your lived experience the last few years has been the economy wasn't as good as it was under Donald Trump, and the media's told you, shut up, that's not true, the data says otherwise. Now they've had to revise down substantially the data. Maybe they should go back to not questioning your lived experience. The reality is this. The economy is still doing okay at the macro level. It's the micro level, the household level, where things are problematic. Rent's too high, interest rates are too high, food prices are too high, gas prices are too high, insurance, everything is too high. You have less take-home pay today because of inflation. And they say they've solved inflation. They haven't actually caused anything to go down. They've just caused the rate of growth to slow down. That means the rate of growth in costs is still going up and higher than what the Federal Reserve wants, but the Federal Reserve may have painted themselves into a box where now they got to lower interest rates, which guess what? Might spark more inflation. This is the Biden-Harris economy, and it's the one Kamala Harris wants to double down on.